This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: weaker US data has halted the bond sell-off. But first, the actual number of US initial jobless claims rose marginally last week, and the number of people on these benefits was actually unchanged from the prior week at 1.7 million, although that was a small increase from year-ago levels. However, the first quarter of 2024 GDP was revised lower to plus 1.3% in their second estimate, from plus 1.6% in the first, and this was more than an adjustment than was expected. The main change was due to less consumer spending than originally estimated. Both retail and wholesale inventories rose in April, but the changes were in fact very small, and the US continues to be a magnet for imports, with a larger trade deficit. However, some of this will be markets reacting to impending tariff rises and may be temporary, but their trade deficit as a proportion of total economic activity is little changed. US pending home sales fell sharply in April, down a whopping 7.7% from March, in a dive that surprised analysts. It was the largest retreat since February 2021. Only a small 0.6% correction from a good March was anticipated. Getting the blame was the impact of escalating interest rates throughout April, dampening home buying, and that left more inventory in the market. And Canada said weekly earnings in March were 4.2% higher than a year ago, a slight slowing from the pace in February when they rose 4.3%. Taiwan also reported first quarter 2024 GDP growth overnight, and that came in much better at 6.6% higher than year-ago levels. And you'll notice that is better than China's equivalent 5.3% in the same period. In Australia, there was a small rise in residential building consent levels in April from March, but they were lower when seasonally adjusted for Easter. Markets weren't expecting that dip. Year on year, however, these consent levels are more than 13% higher. And staying in Australia, major bank NAB is forecasting Perth residential house prices to zoom almost 14% higher in 2024. That is the high outlier. Sydney is expecting a 4.5% rise, Brisbane almost 9%, but Melbourne will be the laggard at 2.5% in 2024. Already high container freight rates rose another 4% last week to push them more than 150% higher than year-ago levels. The same drivers are at play: security risks, canal disruptions, and now the push in the rush to beat the new US tariffs on some Chinese goods. It is outbound from China rates that are being most affected. However, bulk cargo rates are immune to these rises, unchanged again this week, and still at their long-run average levels. The US Treasury 10-year yield is now at 4.56% and down 7 basis points from yesterday. And the price of gold will start today unchanged from yesterday at $2,343 an ounce. And oil prices are down $2 at just on $77.50 a barrel in the US, while international Brent price is now just under $82 a barrel. And the Kiwi dollar starts today marginally firmer from yesterday at just under 61.3 US cents. Against the Aussie, we're a quarter cent lower at 92.2 Australian cents. Against the euro, also marginally softer at 56.5 euro cents. That all means our trade-weighted index starts today at just under 70.6 and little changed. And the Bitcoin price starts today at $69,480 and up 3% from yesterday. Volatility over the past 24 hours has been modest, though, at just on plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.